Hi guys, welcome back to the channel. My name is Dave, and today we're going to be talking about Bitcoin. That's right. Do you Bitcoin? Well, I went out and I asked my community and said, do you Bitcoin? And this is the results from 284 people that were kind enough to say yes or no. So right around 50-50. 51% said no, and the rest said anywhere from 0 to 100%, I suppose, with 9% coming in with greater than 10%. So very controversial still. Do you buy? Is this a Ponzi scheme? What is Bitcoin to you? So I'm going to tell you my story about it, and also understand that from an options perspective, we kind of unleashed the Kraken this week in Dave's world because IBIT and FBTC, these started trading options. So for me, that was my busy week of trading options with these two products. Got a little carried away probably, but really interesting now that we have this option dynamic along with all these ETFs that have come to market. So let's talk Bitcoin. If that is what you're looking for, please stick around. Boop.
I'm looking at about 50,000 Bitcoins.
Bitcoin?
In Bitcoin. That puts it in at around 13 and change.
But you want to pay in Bitcoin?
Yeah.
You sent us an offer in Bitcoin?
So Bitcoin at the time of this recording is trading right around $98,000 per coin. That can change really quickly. I realize that this is still a risk asset in my mind. But my first two BTC orders were back in 2020. I bought $3,000 and then $7,000 worth. So $10,000 all in. That gave me 0.934 Bitcoin for $10,000, and that's currently worth around $91,000. So you can't argue with those results. They're outstanding, but that doesn't mean that you should be getting into Bitcoin. You should still understand what you're buying and why you're buying it, or if you should just stay away from it. But that $91,000 subject to change very quickly because, again, a very volatile asset. But just to put that into context, let's relate it to the current housing crisis. Back in 2020, when I made that purchase, the median home price was right around $329,000, and today it's $440,000. So that's a 34% increase in just 4 years. In other words, today you need 34% more dollars to buy the same exact house. Or you could say that the purchasing power of a dollar today has declined significantly in the last 4 years due to the constant printing of money, which is allowable by our government. This constant printing of money by our government follows what is known as modern monetary theory. That's right, there's actually a theory to back this up. And it basically says we, the government, can print as much as we want since our budget is not like a regular budget because we can just make more. And they are proving that fact yet again this year as we have blown away the budget yet again, spending 6.75 trillion with a T versus the 5 trillion that we actually collected. Not to worry though, they can just print more. Budgets are for silly people that can't print money, like you and I. So anyway, let's go back to our housing example. Remember, it would cost 34% more dollars today to buy that same house. But what if we used Bitcoin in 2020? It would have cost us about 31 Bitcoin with an average back then of around $10,700 per coin based upon my first two transactions. So today, you could buy the same $440,000 house for about 4.5 Bitcoin, not 31, 4.5. It would cost just 14.5% of what it cost 4 years ago. Put another way, if you had just invested your $329,000 into Bitcoin back in 2020, today it would be worth just over $3 million, and you could buy about 6.9 houses. You could basically buy a whole block just for you, or maybe more practically one giant big house. So why did I buy Bitcoin in the first place? Well, I do consider myself a pretty conservative investor. If you look at my core holdings, it's things like the S&P 500, maybe some sector ETFs, toss in a lot of bond exposure and municipal bonds, things like that. Pretty conservative. But on the other end, I do take some risks. So I would consider this a risk asset that is sliding slowly towards the middle. And my story, by the way, and you can jump way past this. I'll put chapters down below if you don't want to hear my story. I get it. Everybody has a story when it comes to these types of things. So now you get to hear mine. And mine starts with the guy at the bar that threw a card on the bar and said, "You got to buy this stuff," probably 10, 12 years ago. And I said, "Tell me all about it." And then he told me about it. I'm like, "This is really silly. I'm not going to give you any money." Fast forward to 2019, 2020, and that's when my son actually came to me and said, "Dad, I want to go buy a dagger." I'm like, "Okay, let's go stab some people." And he didn't want to stab anyone. He just wanted to buy a virtual dagger in a video game, this online video game that he was playing. So I'm like, "Well, show me what you're doing." So we went up to his room, and he converted all his money to Ethereum without telling me. What kind of son is that? And I'm like, "Okay, this is really intriguing. What is Ethereum?" He started explaining it, telling me about the blockchain. He knew a lot more than I did. It was very impressive. I said, "Well, what do you want to do?" He's like, "It's $130. I'm like, "$130 for the virtual dagger?" He said, "Yeah, Dad." Okay. Where is this kid? Is he down the street? No, he's in China, Dad. I'm like, "Okay, well, this is really interesting." So he went through the purchase. He showed me how to do it. Buying a virtual dagger with Ethereum from a kid in China. Now, I'm getting older, so are you probably. A lot of my people that watch this are a little bit older. Maybe you're in retirement and you're looking at all these people that are doing this saying they're nuts. But as we get older, these are the kids that are coming up that are going to inherit the earth, and they're getting quite comfortable making these types of transactions. It is becoming more and more mainstream. So back in 2020, after that experience, that was kind of my light bulb moment, and that's when I decided to make those first two purchases. Now, when it comes to risk and BTC, I do feel like we've made a lot of improvements over the last several years. So even if I go back to 2020, when I first put money at Coinbase, it was a little bit tricky. And if you follow Coinbase stock, that thing's all over the place. But after that, I started moving some money over to Gemini and a little bit to a company called BlockFi. Only a little bit, luckily, because BlockFi went under and I only got a fraction of that money back. I got burned. And I had somebody comment on my poll that they had some money at Celsius and they got burned. When you have that feeling, you certainly don't want to rush back in and put more money back on an exchange like that. So BlockFi, Celsius, Voyager, and of course FTX made all the news, right? So people that had money in there, they lost a ton. I don't even know if all that's been settled yet, but terrible feeling, and obviously not something you want to be involved in. But now we do have ETFs that are on major exchanges, so on brokerages such as FBTC with Fidelity. And by the way, FBTC, they are the custodian of their own Bitcoin, so that's there. But I also do it with IBIT, IBIT, and that is from iShares, and they keep the custodian of those Bitcoins is Coinbase. So again, you can split up a little bit of that risk, but buying it on Fidelity or on E-Trade or something like that, I think it makes a lot of investors feel a little bit more comfortable with the risk. Now, I think the ETFs are great and will certainly allow for wider adoption, but if you really want to own the Bitcoin yourself and be able to move it around yourself, you might look at something like Coinbase, or you could also check out River, which was something that was recently pointed out to me. I opened up an account there. It was very simple, very easy, very streamlined approach to just using Bitcoin. I'm not into alternative coins, but I do have a little bit of Ethereum as well. Those are my two. I lean heavily towards Bitcoin. But yeah, you could check that out. Check out River. There's an affiliate link down in the description. Very easy to sign up. Very smooth platform. So check out River. So I have been actively buying Bitcoin this week, mainly through the ETFs and mainly through IBIT, IBIT. But why buy now when it's so darn expensive at nearly $100,000 a coin? Well, I still think it's a good time to buy this stuff. I mean, after all, our president in waiting, he likes it, and his cabinet likes it, and Mikey likes it. Anyway, they all like Big Macs apparently anyway. So I'm going to go all in on McDonald's and Bitcoin. But seriously, have you heard of the potential Bitcoin reserve, right? This is proposed legislation, I'm sure you have, by Senator Cynthia Lummis. And by the way, I hear she has 5 Bitcoin in a blind trust. And have you heard of Polymarket, our new favorite betting website? All right, this betting website now has the odds up to 38% that this reserve could actually take shape. Or how about Pennsylvania and their Bitcoin Strategic Reserve? It seems like they've got a lot of momentum here, right? These are just a few of the reasons why I started increasing my exposure to Bitcoin. Now, the easiest way to get exposure to Bitcoin these days are through the ETF offerings that are out there. When they first came to market, the first one that I bought was FBTC from Fidelity. As I mentioned, they hold their own Bitcoin. In this case, the expense ratio is 0.25%. So I would really say your decision should be driven by that expense ratio. So pick the one with the lowest expense ratio. They're all going to kind of do the same thing. But if you start exposing yourself to a lot of these, you might consider buying a little bit of two different types. So I start out with FBTC, but IBIT offers half the expense ratio for the same product. So I've been gravitating towards IBIT from iShares. So in this particular case, 0.12%, same performance, it is Bitcoin. So these are the two that I've been going after, and these both offer options now, which again is my tiny little fire of Bitcoin here has now been ignited with a giant can of lighter fluid. So we're off and running, and that's what we're going to talk about next. But Neos, I will be talking to the guys from Neos here soon. I'll get a video out on that. Already connected with them about BTCI, and this is their Neos Bitcoin High Income ETF. So I'll have a video coming out about that. And by the way, this is all information from Seeking Alpha. I'm a Seeking Alpha affiliate links down below, and Black Friday is coming this week. So if you ever considered it, now is probably one of your best time. I'll put something up now to show you, yes, great offer. Go for it. If you've considered it, maybe now is the time to pull the trigger. Look for it this coming week. Happy Thanksgiving, everyone. But yeah, you can see the expense ratio for this is all the way up to about 1%. And again, we'll explore this more. But now I want to really jump in and take a look at some of the different option trades that I did this week and how I've been adding IBIT to my portfolio. So now that IBIT has options available, let's take a look and see if these can work for us in our portfolio. This week I've been buying IBIT, I've been selling calls, I've been also selling puts. But which one should I pick to do? Well, classically, puts are a little bit more expensive. So if you're looking at a SPY option chain under normal conditions, typically it costs a little bit more to buy a put to protect your portfolio than to buy a call looking for upside potential. That's just the way things are shaped up. Now, when some stocks start getting lots of momentum in there, that can switch around and calls can become more expensive. So that's the situation right now with IBIT. That's kind of one of the first things that I kind of keyed in on. So if you buy this and you sell a call versus if you sell a cash secured put, you're going to receive more money. And that's what you can see right here. Sell to open one call, 61, 4.5 points above where we sit right now versus 4.5 points below for a put. What's the difference? 235 to 175. So that's a big significant difference. So you're getting a large benefit by buying this and selling calls versus selling puts at an equal distance from that strike price. So that's one of the reasons that I want to own this. So a lot of my plays this week have been buying chunks of IBIT and selling calls against a portion of those shares that I bought. So maybe I would buy 500 or 600 shares and I'd sell 2 call options. This is going to reduce my basis overall in case there is a pullback in this very volatile asset. But for doing so, I'm being greatly rewarded. So the next step of this is to set up a trade, plug it into our calculator, and kind of see what kind of return we're getting right now with IBIT. So I will admit that I went a little hog wild. I picked lots of expirations. I bought lots of shares. I sold them out a week, 2 weeks, 3 weeks, a month. I went out, I did some leaps. I have all kinds of things in my account right now based upon IBIT. I probably went too far. We'll see if I'm rewarded for taking on this risk. But if we set up a trade like this, just sell to open, let's suppose that we wanted to buy 600 shares and we're going to put $30,000 into this trade. I know that seems like a lot. And you could definitely do this on the put side, but I like the reward on the call side. So I'm going to sell to open. Let's say I did 3 contracts. Let's say I bought 600 shares, just to put some context around this. I bought 600 shares and I want to hedge my portfolio. Now, typically when I say I'm selling a call, I'm not really thinking about it as a hedge truly, right? If you really want to hedge, you're buying puts, you might be buying calls depending on what situation that you're sitting in. But with the amount that you're getting for these particular trades, I really think you can count it as a hedge, especially as you go out further. Now, I don't really want to go out too far on the expiration for the bulk of my trades because I think you're getting rewarded substantially for selling short-term contracts in this case. So 1 week, 2 week, 3 weeks is where the bulk of my trades are going to be, and I'm going to hopefully continue to roll these out and pick up that premium as much as possible. So let's just say sell to open 3 call contracts, and I picked December 20th in this case. So that's a little under a month at a $61 strike price. So since I bought, in theory, 600 shares, let's say I decide to sell a little bit closer to the money on this one, and let's try to generate the maximum premium. So let's just go a little bit out of it. Maybe you go 1 point, let's go to 58. That gives us an extra $150 per contract that we can have in price appreciation. There is a lot of pressure, a lot of momentum in the stock, so we might be able to pick up 150 times 3, about $450 additional from just having bought IBIT and then sold it at the higher price appreciation. Plus, we're getting about $330 per contract. So if I just went to market with that, we're going to generate $1,000 in premium. Pretty outstanding. So that's what I'm going to go with this setup. And then let's go plug this into our calculator and see what that looks like for this particular trade with IBIT. And this idea of I bought 600 shares, I'm selling 3 call contracts. Let's see how that looks. And of course, if all this option talk is confusing to you, but you're curious about it, I will link the basic options course to get you started right up above. Don't start here, start there, get the basics, understand it before you jump in and do something that you would regret. Start with the option basics, again, linked up above and down below. So if we port all that information over here to a covered call calculator, we can kind of get the shape of what this trade might look like and how much volatility is in this product right now. So today's date's 11/23. That is a Saturday morning, and this information is not going to be completely accurate with what you're going to be able to do Monday, but it is in line with what I've been doing all week long. So in this case, remember, we were thinking, hey, let's buy 600, let's sell against 3 in this particular case so that we can ride 300 shares higher, and we can hedge ourselves a little bit with these 300 shares. IBIT 12/20/24 expiration. Stock price is currently $56.49. We go out and we sell a call option with a $58 strike price, which means it has to go up 2.67%, which we get to keep for it to get called away. And for that, we get to collect a premium of $1,018. So that all sounds great. Lots of volatility, lots of potential premium that we're going to get to keep. 27 days till expiration. And during that 27 days, we're going to make a 6% realized gain if this all comes to fruition, right? If this actually plays out this way, and even if it goes up, we're going to still make that 6% on that particular trade. Plus, we get the price appreciation. So I always like to break it down here for people that are new to options. There's 3 different things that can essentially happen, right? The stock goes above the strike price, which is $58 a share. Maybe it stays flat, or maybe it declines, right? We kind of play out these scenarios in our head to see what could potentially happen and how we feel about this trade. So if the stock goes up and it gets called away, we're going to lose 300 shares of our 600 that we purchased. I like to do that with something that has a lot of momentum and I have a positive view of, because we get to have that upside with those 300 shares, but we might have to give up our 300 shares that we sold these calls against. In that case, we would make $453 on that price appreciation. Plus, we get to keep that premium for a total gain of $1,471 in this particular case. So that gives us a real profit of 8.68% over that short time period. If we extend that all the way out a year, annualized it, acted as if we repeated this trade all year long, we would make 117%. This is where people like to blow smoke when it comes to the options world, and this is how they attract people. But this is real numbers. These are real numbers that could potentially happen with this particular trade. However, bad things can happen as well. Let's say it dropped all the way down to 45. Don't forget it's at 56.49 and we're dealing with a very volatile product. Drops down to 45, we're going to lose $3,447. But we have all 600 shares still. And on the premium side, we still keep the $1,018, so we have a $2,428 loss. Pretty significant, terrible. It dropped down that much. And don't forget, this is based on 300 shares. You have 600 based upon what I talked about. So be ready for that volatility. Negative things can happen, but you still get to keep all that premium. You could probably go out and sell more calls if you wanted to at that point. And our break even down here is based upon those 300 shares only. So selling, if you just wanted to buy 300 shares, sell 3 calls, it would reduce your break even overall to $53.10, even though you bought it at $56.49 because it's offset by that premium that you collected. So altogether, that's giving you this hedge of about 3.39 points. And down here, I just ran some data as well to say, okay, we only did it against half of it. In that case, what do we get the benefit of? In that case, on 600 shares, you'd have a break even of $54.79, giving you a hedge of about $1.70 by selling these calls against 300 of your 600 shares. So that's kind of a breakdown, and that's what I've been doing all week, and I've generated a lot of premium this week. Hopefully I get to keep it. That's often not discussed. Do I get to keep it? It's a really important factor. So we'll see how that all plays out. So playing with fire a little bit. Obviously, when there's that much volatility in a product like this, be prepared for that. But that's just a breakdown. Again, I've done way too many of these this week, and I'll probably give you an update next week. But a lot of fun, lots of premium. We'll see where it leads me. So let's look at one more option trade idea with IBIT. In case you are an IBIT Bitcoin bull and you think this new administration is going to catapult this thing even higher than it is right now. So if that is your idea, you might just go long calls. So before we jump into this, let's put MicroStrategy up here because this is a lot of fun, right? MSTR, MicroStrategy. This is Michael Saylor. He had a tech company. It wasn't profitable yet. He decided to go in a different direction, and he put Bitcoin on the balance sheet, right? Crazy idea. It's paid off. He continues to raise money, and he buys at the tops. He buys at the bottom. He just continues to leverage and buy more Bitcoin. And if you bought MSTR at the beginning of the year, you've seen exceptional returns. If you bought the Yield Max version as well, I think that's MSTY, you've done exceptionally well. You know, and I did a review of Yield Max products last week, and I got a lot of criticism for it. And by the way, I think that's wonderful. That's what we're here for. Let's have that dialogue. Let's continue that. But, you know, looking at MSTR, now you start to see it getting a little decoupled, and people are doing the math and seeing what other value is in this product right now. So you're starting to see shorts come in. And if you said, Dave, should we short it? I would say, heck no. No, I'm staying the heck away from that thing. So if you own it, great. Continue to ride it. If you want to buy into it a little bit, that's fine. But don't short it. And I wouldn't be buying it right now. Instead, I would probably do what I'm going to show you right now, which is to go long calls with IBIT. So for me, instead of going out and buying MSTR at this point, I would rather just do my own leverage by buying call options. In this case, in the form of a Leaps call option on IBIT, with IBIT currently at $56.49. So pretty simple setup and just a few numbers to kind of understand here. So I'm going to buy to open one call option. I picked January 16th. That's out over a year. That means it's going to qualify me for long-term capital gains. And I picked a strike price of $35 for those that are in the know. That's about a delta of around 89. So it's pretty deep in the money, and that's how I like to set these types of trades up. So let's look at the cost of admission to doing it this way, because if I want to go out and buy 100 shares, it's going to cost me $5,649. But if I want to trade this option that gives me control of 100 shares, it's going to cost me right around $3,000. I'm rounding up. $3,000 instead of $56.49. So quite a bit less. Maybe this is more palatable for some people out there. So let's break down the numbers really quick. If I take $56.49 minus 35, I get $21.49. If I multiply that times 100, that's $2,149. That would be what we call the intrinsic value of this particular option. That's the actual real built-in value because I'm buying it so deep in the money, meaning the strike price is well below the actual price. The other number that's still in there that makes up this $3,000, if I take $3,000 minus that $21.49, I get $851. That would be our extrinsic time value of the option. That's the price of admission to controlling 100 shares all the way out till our expiration date. And that's our leverage, right? So I'm only paying this much instead of this much to control 100 shares until expiration. So that's my MSTR version that I would like to have. And that would give us our Our max loss, of course, is if this goes down below our strike price of $35 at expiration. But again, we can continue to roll this out. So if we are have a long-term view of IBIT going up and continuing this climb with this new administration, then this might make sense and you can roll this out. And again, your ticket would cost you, again, about $851 next year after this is about ready to expire. Again, we have a long-term view, and it doesn't cost us nearly as much capital to do so. So that's why you would get that. Now, just to put a little bit more context around it, this 35 in relation to 56.49, with this representing around $98,000 for one Bitcoin, 35 would represent around 61,000. Okay, so it'd have to drop down to 61,000. So that's a number that could still occur for certain. This is a very volatile product. And then the break even here of 65.30 at expiration would represent about $113,000. So you do have to have some upward movement until expiration to become profitable because of that time value that you're paying for, that $851. But this is a good way to play it if you want to leverage yourself a little bit and make your own MSTR. And if you're really into this idea, if you've really drank the Kool-Aid, then I suggest you go watch this documentary. I watched it this week, God Bless Bitcoin. So interesting documentary and their take on why this is such an important movement. So yeah, check out God Bless Bitcoin. I'll put the link down below in the description. So Bitcoin, it's a very exciting world to explore. And, over here, I've got, guys like this that I highly respect that say I wouldn't touch it with a 10-foot pole. I get it. And over here, I've got guys that I listen to routinely that I'm like, that makes a lot of sense. So I'm probably somewhere in the middle of those as I explore Bitcoin more myself. So I'd love to hear what you think about this whole thing down below. Let me know what you like, what you don't like, if you're considering it, if you've thought about pulling the trigger. Definitely explore the options if it's of interest to you. And yeah, do you Bitcoin? I do. So we'll talk to you next time. Have a great night. Take care. Whoop.